Okay guys, welcome to the channel. This is Sunday morning and I have come up with the video this week for the analysis of running trades. I will discuss my running trades that are currently running, okay, and what happened in the past week, this week, where and all I have booked my profits, and which new stocks I have taken an entry. We will discuss that, and we will discuss the exit strategies for the running trades, where we will be exiting, our stop losses, okay. This is about running trade. The other part is the orange list, which I do weekly. Every weekend I do some analysis, and I prepare a list of stocks to watch for the coming week, and take action on those stocks. So I won't deviate. So this is my focus list. So I don't care whatever happens, I'll just be focusing on these stocks in the next week, and I'll be looking for setups. Like, setups are there, I'll be just looking for breakouts or whatever entry that I can get, and I'll be taking an entry only in these stocks. Out the stocks from this list only I'll be taking an entry if I take an entry. Okay, so let's start quickly. And so these are my running trades, but before we go to running trades, I have exited. If you remember from my past, a week ago's video, I had an entry. I had what do we say that Adani Power as running trade. So I have finally exited Adani Power. Okay, let's discuss that, how I exited. And so I have marked here for simplicity, so we can easily discuss this. Okay, so if you see here, let's see. Okay, so we had entered here, uh, basically a low cup and handle cheat. So this is a cheat pattern. So basically, cup and handle, how it would be is like full rounding bottom here, and at the top there would be an consolidation. That would be a proper cup and handle, but this is a cheat. So if you have heard Mark Minervini, so Mark Minervini's method is this one. It's a low cheat entry. So the contraction happened at the lower part of the base, this way. If this is a base, so contraction happened in lower part, and we had a very good breakout on good volume, we can say above average volume, as you can see here below. So clearly institutions were piling up. The stock went here at the top, so I thought maybe it's near all-time high. Maybe it can do a bit of handle formation here with people trying to exit. The people who have taken entry here, they might want to exit here, and it might form a handle, or it might consolidate here a bit. So I took 50% off at this point. So I took 50% off at around 14%. Okay, my stop loss was, let's say, 4%. Okay, so I took my profit around 15%, that is half of the profit, and I then let my trades run. Okay, and after that, it was an amazing run, guys. It was parabolic move. After that, we had huge expansion of volume, and you can see here, it's basically upper circuit for next 5 days. So this four, so you can see here the percentages. Okay, it's 4.98, that is 5. Upper circuit 5%, upper circuit here. This is not an upper circuit, this is 3.13%. 5% is the upper circuit for this stock, and again it was an upper circuit, and it was some serious run here. It was an amazing run. So it went 44% up from my entry point, but I did not book, because I had planned to book the profit once it breaches and closes this, what do we say, this 10 SMA, 10-day moving average. So basically here, when it fell 5%, I tried to book, but my order didn't fill in because it was a lower circuit, and again it fell the next day. Again my order did not trigger, and on this particular day, it again opened in the lower circuit, and it actually went up to hit an upper circuit here. If you see here, the entire range is around 10%. So it opened in a lower circuit, and it went, and it was immediately bought, and it went above, like above the opening price, and 5% above that it hit the upper circuit, and again it was like around that 4% at that range, and I booked my profit over there. So I thought that is a good time to exit, and I exited the stock. So if you see here, on my remaining 50% position, it was booked around let's say 34%. Yeah, it went above almost 45%, but no worries, I have no regrets. This is a very good return, I would say. Okay, in a month. So here first 50% booked around 15%, remaining 50% booked around 35%. So it was a great trade. Now it will again form a base probably, and then again we'll see if we want to exit or something. And another stock which I have exited is Mirza Enterprises. If you see here, I exited it because it is not showing me the strength, or probably the broader market may roll over. I don't know. I don't have much confidence in this particular stock. It may go up, I don't mind, but if you see here, we took here, we booked around let's say around 12% profit here. So basically it broke out here, and then again it formed a kind of a tightening area here, and when it broke out I added around 15% of my original position, and I waited, and it did went up. It is trying to consolidate here, and I'm not looking to wait around for consolidations, because I'm looking to rotate my money from one stock to other and just compound my gains. Okay, why I exited this stock is because it has breached the 10-day moving average, as you can see here. So once the stock breaks 10-day moving average, it generally tries to consolidate for some time, and then it will go. That's okay, but I don't want to hang around for a month or so, like without what can we say, I cannot have my money stuck for 1 month. I'd instead move my money to the stock which is showing momentum. So that is the only reason. Otherwise it is still good. This structure is still good, and it can actually consolidate a bit, and it can go up. So yeah, people who like to hold on longer can definitely hold on, but I try to move my money, rotate my money, and compound. So that's what my style is. So this was Mirza Enterprise, Mirza International, Adani Power, we just discussed. And now let's come to the stocks that I'm holding right now, which are running. This one is Rajdandini Metal. So I took an entry here. I saw that it is moving up, and it's moving up in my direction. I felt confident. I added around 30% of my position, and I waited. It's moving up steadily. Notice how it's staying above this 10 moving average. So basically that's the reason that I don't like to keep stocks which are breaching this 10 moving average, because after that it will take some time for it to consolidate and again move up. Best example would be here. If you see here, this is a big move. I don't know if so. This just for example. If you see here, it just stays about 10-day moving average, stays about 10-day moving average. Yeah, here it breached and it did some consolidation, but this is something else. This is some serious momentum. Even if it is breaching again, it's going up, and yeah, after this particular move, after this climactic run here, it breached 10-day moving average, and then it is forming consolidation. So basically what I want to do is I want to avoid this phase. I don't want to stay in a stock in this phase. I know, yeah, I know it'll again consolidate, and again it will break out and go up, because these are the stocks which have brilliant earnings. Okay, basically my criteria, I've shared you the criteria last week. My basic criteria for screening the stocks is the stocks which are having greater than 40% earnings, yeah, greater than 40% earning, greater than 30% sales. So these are, and they are above 200 moving average, 200-day moving average. So this is the basic criteria which I look for. And another thing is this moving average, 200-day moving average is there, right? So I want the averages to slant up like this. It should slope up like this. Okay, it should not, then only it would be in a stage 2, I would say. Okay, stage. So there is a concept of stage analysis by Stan Weinstein. I say you Google or you read his book, I don't know, do something about that. Okay, so if you see here, so moving average has not started because it had opened, or I don't know, it was an IPO back then. So if you see here, moving average is like probably if it were, it would have been flat here. And notice that the stock is in stage 1, it is in sideways consolidation, okay, and then it breaks the stage 1, it enters the stage 2. Stage 2 is where the stock marks up, okay, stage 2 with volumes, okay, this is stage 2 now. In stage 2, the stock just has amazing momentum, okay, it will just keep going, it will go for 1.5 years, okay. A stock can be in a stage 2 for around 18 months or so, as we have read in William O'Neill's book. Yeah, so that's the type of setup I'm looking for. Basically, the fundamental criteria is it should have strong earnings. That's just only fundamental criteria. I don't do any fundamental analysis, nothing. I'm just looking for earnings, that's it. Because this kind of moves, this kind of growth can only be achieved, this kind of move only be achieved by growth stocks, and growth means there should be earnings. So that is the one criteria that I look for. So all these stocks are growth stocks. Read about CanSlim if you have not come across CanSlim. Read about William O'Neill, read about Mark Minervini. Okay, so that is some resources giveaway. So here, as you can see, it's staying away. So my current plan of action is, it's not showing me burst of momentum, like other stocks. I'll show you how other stocks are showing burst of momentum. Again, if it falls below this 10 SMA, I'm going to exit, because I have entered on 8th August and today is 28th August, and it has not moved much, guys. It has not moved. It's just 3.2%, which is not at all great. It's very underperforming, I don't know. So I'll just wait. If it falls below this, I'll exit on a profit. That's what my current plan is, and if it goes above, then that's well and good. Let's go to Vishnu Chemicals. Yeah, so this is what kind of move that I'm expecting when a stock breaks out, right? Rajnandini, if you Rajnandini metal, you see it did broke out, it stays above the breakout zone, which is good, but it's just not showing that momentum. I want that momentum, guys. I just want to rotate money between that laggards to leaders. This is leading like anything. If you see here, this is brilliant. It's a base, okay, again it's a low cheat, or a VCP, as you can see. The contractions are reducing. So this big contraction, small contraction, small contraction, small contraction, small contraction. Literally at one point there is no supply here, there is no supply, as you can see. Just before the breakout day, there is no volume, indicating that there is no supply here. When there is no supply, even a small bit of demand which comes in will move the stock higher, and a demand did came here, and the stock just ran up. Okay, so this is what is VCP. This is what I'm looking for. It's all about demand and supply, guys. So as you can see here, I have booked 50% profit at this point, okay. On that day, I like to sell into strength, I don't like to sell into weakness. I want to sell when the stock is really moving up, okay. So if you see here, our stop loss was 6.7%. we have booked our 50% at 23.94, that is 1:4 risk reward. That is really great, and I think this is a good this can move further because it is supported by volumes. Whenever it moves up in volume, as you can see here, moves up in volume. Notice the 10 moving average, 10 days moving average, it just stays about 10-day moving average. You see, that's the thing. If it is a true breakout, it will go right away. It won't come below your even if it comes, it will quickly go back up. It will always show you in green. It will never give you a headache. Those are the best breakouts, and those setups will work, right? Those are the setups that you want to be in, and you can even add to those positions. Basically I could have added here, but I did not add. Did I add? I'm not sure. I don't think so. I didn't add on this one, I think. Okay, anyways, so it is around up, so I booked around 24%. Let's see how it goes. I'll wait for it to move up, or maybe if it falls below this one, which is still far, so it may consolidate for a day or two, and then it can start moving upwards. So everything is good on this one, okay. The volumes are supporting, institutions are coming in. Now these volumes are not cannot be created by retail people, guys, okay. There's no chance that look at the average volume. Okay, this blue line is the average and this is the volume for that day. It is definitely, I think it is 10 times, I don't know, looking at the visually it might be around 10 times the average volume. So when the stock is being bought 10 times the average volume, it is institutions. It's just institutions. Okay, institutions are just piling in, they want a piece of this. So let's see how it goes. It looks good at the moment. Now next one is Vishali Pharma. Okay, this is again, if you notice, we are having similar setups here, guys, similar setups. Okay, again a VCP but a low cheat entry. Okay, or a cup with a low cheat, well, you can name it anyway. Basically what I'm looking for is the price to be contracted. The one thing, the price or the volatility should be contracted. The other thing is diminishing of supply. Basically there should not be supply. So if you want me to write it down, see, this is price contraction, price or volatility contraction. Contraction, the other thing is diminishing supply, because only when there is no supply our stock will go up in the least line of resistance, as Jesse Livermore calls it. Okay, this is what we are looking for, and it should be in a uptrend. It should be in a uptrend. Okay, uptrend. Stage 2. Stage 1 is a sideways base forming where the moving average is flat. Stage 2 is when the moving average is like this. Okay, when the stock moves up in a trend. Clearly, as you can see on the breakout day, there is a huge volume, and clearly it suggests that this is a good trade, because this is a huge volume. That's some serious volume. As you can see here, when it consolidates, it just consolidates with low volume. There is no supply. Okay, there is no supply here, and when some demand comes, it's just amazing. So what I'm going to do, so I took a trade here. I saw that it is moving up in my direction. So this is not the original stop loss. Original stop loss was around here. Now my original stop loss is around here. Okay, around here. Now my stop loss is around here. So that's what I have marked here, to alert me when the stock price comes here, so that I can exit. So I keep my alerts. Okay, so whatever it is, so now I added when it started to move in my direction. So I am very good, I have very big position on this one. Okay, and I'll be further adding if this guy moves above this consolidation, because this will again look like a contraction or a cheat area, low cheat, low cup and handle, or that kind of area, again. If you can see here, there is no supply coming in here. Okay, very tight range, no supply. Even a small demand will rocket it upwards. So I'll again add here, and I'll be really heavy on this one. I'm trying to pyramid on this one. Okay, pyramiding is a concept that will make your gains compound like anything when you're right. So if I'm right on this one, I should be making some good profits, because I'm pyramiding. So let's see if it breaks this line, then I'll be adding to this position. This position is playing out fairly well. That is done on Vishali Pharma. Hope I am okay. I am here. It's all is good. Just want to check if everything is good with the stream. Okay, next, again, as you can see, all my setups are looking same, guys. You will be bored. Okay, everything looks same here. Also, again, a base and a low cheat area, a low contraction, VCP. In the contraction, I would want to see very low volumes, indicating that there is no supply here. You can see no supply, no volume, no supply, and this forms a contraction area. The trend is up, as you can see. 200 is sloping upwards. Everything is perfect on this one. Okay, Now it breaks out, I entered here, it moves in my direction, I add it to my position. Okay, I have added. It's not like when you have, let's say you have taken a position for 1 lakh, you're going to add 1 lakh here. Okay, you're going to add 50k here, so that your average cost will remain low. Do you get it? Because pyramiding is, you know what is the shape of pyramid, right? Pyramid looks like this. So what you want is your highest position sizing to be taken at your breakout. Okay, when the starts moving upwards, you'd be adding a little. So this is not the same position as this one, it is lesser than this position. Okay, as you move up, you have to reduce your positions. Okay, you have to reduce your position, only then your average cost will be lower. Okay, that's the point, that's the pyramiding. So when the stock performs well, you will be in a huge position. Okay, you have a huge position and it has performed really well, and you will be getting the gains accordingly. So that is the concept of pyramiding, and losers average down and winners do this pyramiding. Okay, learn from any read about any great traders in the past, Jesse Livermore, William O'Neill, you can Nicholas Darvas, everyone, each one of them have done this pyramiding, and this is the way to gain huge returns. Okay, so I do pyramiding, I don't do average. Okay, so this is showing really good volumes, it's moving, so it has, I think its circuit is 5%. Yeah, its circuit is 5% and it has hit an upper circuit past last day. Here also it has 4.31, 5% is upper circuit. It's good, it's really good if it's performing well. And we are already, so our SL was around 8%, we are already up 15-16%, so we are already 1:2 up on this one. So I will see, and yeah, let's see, this is good, it can go quite a distance. So let's see. Next one is LG equipment. Okay, next one is LG equipment, and as you can see here, we have taken a breakout here. Okay, after the breakout it goes up. As you know, I pyramid into my working positions, I pyramided it, I have added some positions to this one, and it looks good. Basically it's a long base, it's a long VCP, if you see here. So this is the first contraction, the second contraction is smaller, the third contraction is even smaller, there is no supply. Before the breakout, you see here, there is no supply, there is very less supply, and it breaks out, shows good volume, everything looks good, I have added to my position, simple. Okay, we'll be waiting and watching how it goes. This is Arman Financial. Okay, again same thing. So yeah, it's a big base, second contraction smaller, third contraction even smaller, there is again fourth contraction even smaller, no volume indicating there is no supply at this point. It tried to move up, it broke out, I took an entry. Okay, I took an entry. Now I'll be adding if I'm correct, right? If market proves me correct, hence I have a alert here. This line is an alert. Okay, this line is around how much percent above my entry? Around 2.6%. So basically if this stock moves and hits this alert, basically I am correct in my trade, right? The trade is correct, and it's proving to me, the market is proving that I am correct. When the market proves me that I am correct, I am going to pyramid, I am going to add at this point. Okay, simple, no big deal. Okay, I know people don't get this concept, like why we are adding when the stock goes up, why we are averaging up. Okay, that's how I just showed you, like I drew a pyramid and showed you, when you are right you should have the largest position. Okay, that's the reason. So when I am right, I should have the largest position. That's why we are pyramiding and averaging up. Okay, when I am wrong, I don't want to be averaging down, I don't want to get my position big and make a big loss on it, right? Yeah, it's just exactly opposite of the averaging down. You know how many times you have seen people, the stock falls, people just average down, they make huge, so they have a huge position now, and further the stock goes down and their eyes goes like, wow, I'm getting it even cheaper, and they buy at even lower price. And what happens is, they are now having a huge position, and the stock has fallen like anything, and it has gone 60-70% down. 60-70% for a stock to fall is not a big deal at all. It's pretty normal, guys. You can see a lot of them falling like that. Okay, so I am doing exactly opposite of that. Got it? Simple. So that is the running trades. Okay, now quickly let's go to my setup or analysis, or the setups that I have identified to look for next week. So guys, you can see here in my orange list, this is the setup that I will be looking for next week. We have 20 stocks, so 5 or 6 stocks had been there in previous week, and they are still showing good setup, so I have kept them. I have rolled it over, and then I have added 15-16 more stocks after yesterday's analysis. Okay, so now we'll go quickly we'll go. So as you can see here, there's a good contraction. So again, these are all stocks which are having good earnings. Okay, which are having good earnings. Yeah, so as you can see here, there's a contraction here. Now I hope you can see the contraction, because every time if I draw, it will take the video will take longer. So as you can see here, there is a contraction. The price is contracting. Now here the volume is diminishing, signaling that there is no supply and price is holding at this level. Okay, and when a small bit of demand comes, it'll burst through because there is no supply. Okay, this is the VCP. So I'll be waiting. If it breaks out here, then I'll be taking an entry, but beware that maximum at any time I have around 8 stocks in my portfolio, at running. I don't like to keep more than 8 or 10 stocks. So 1 2 3 4 5 6 are there currently. Okay, now let's say around 10 stock breaks out, so I'm not going to go beyond all 10 stocks. Okay, I'll be taking maximum around 8 stocks, and I'll just let it slip. Okay, we can't buy everything. Okay, we don't have unlimited supply of cash, right? So this is KI Industries, looking good. Yeah, this one is an IPO. Okay, and this one is an IPO play. If this breaks out and it goes up, it can really give a big returns, because IPO bases are really they give huge returns. Okay, they give huge returns in a very short period of time. So as you can see here, it is a base, it is a handle. So basically you can say this is basically a cup and handle. This is pure cup and handle. Okay, people who had bought here and were stuck when this move happened are trying to get out now here. Okay, they are now getting out, and this stock is holding. Okay, it's not going down because there is not much supply. If there were supply, the stock would go down and the volume would show here. See here, there's a huge supply. Okay, you can see that in volume there's a huge supply. Here the stock goes down. Okay, it comes up again, look at the volume, it goes down on volume again, still there is supply, right? Again now it consolidates. People who had taken here might have got out here, somewhere they have, after so many months, they would have gotten out here, and the remaining people who are still here are now getting out at this point. They are saying that, okay, I'm back to my cost, so I should get out, and they are getting out, but it's not falling because there is not much supply. Okay, most of the people have gotten out. Now when there is no supply, when a demand comes, it'll rocket through this point, and I'm just waiting for it. So I have set an alert. Again, guys, this is all, everything is for, this is not call or recommendation. Okay, this is for study purpose. I'm not a SEBI registered advisor. Okay, you can have a look at this, you can study them. Okay, so this is not any calls, or it's not recommendation. Okay, now next one is KPI Green. KPI Green is also an IPO base, but yeah, I have noticed I have not set an alert because I am waiting for it to do a bit of contraction here, then probably. So this is just in the watch, there is no setup as such here. So MBAPL, actually we have missed an entry, to be honest. We have missed an entry. If you see here, this is it's a tight base and it's a tightness here. It tries to it's a breakout and it's holding up. Okay, we have missed an entry here, so probably I can remove it, or I don't know, I'll watch it. If still further some still if 1 2 days it stays below it, if it does not goes up and stays there and then it breaks out again, then I'll try to consider that. Siemens, yeah, Siemens India is also showing a bit of contraction here, and we'll be looking to take this breakout if it ever happens. Now DHP India, okay, so DHP India, as you can see here, this is the first contraction, second contraction, third contraction is small. There is not much supply, volume is less. If it breaks out, I'm going to buy. DISA India is, it's showing some bit of flag. Yeah, not a flag. It's actually a cup and handle. Okay, it's a cup and handle. So people are. It looks good, you know. It really looks good. It's a big cup and handle. There is less volume, so if it breaks out, I'll consider buying this one. Okay. So notice this volume. It's a huge volume. That's institutions buying there. Now next up is Navneet Education. Navneet Education does not see now. So if you see here, this is still in stage 1. Okay, this is still in stage 1. Why I'm saying? Because look at the 200 DMA. If you notice my trades, I don't trade the stocks which are having this kind of flat 200-day moving average. These are in stage 1. I trade the stocks which are in sloping up, when the DMA 200 DMA is sloping up. Okay, those, so basically what is happening is it's actually just now breaking out of stock stage 1 and it's moving into stage 2. Now when this starts to curl up and slope up, and when a setup forms here, I'll try to buy, I'll try to do something, but right now I think it's premature. Okay, so I'm going to remove it. I don't know why I added it. So that is removed, done. See, this is what I'm talking about, stage 2. The DMA 200 DMA, it should be sloping up like that, then only I'll consider it. Okay, so that is what it is. Okay, now here again it's trying to, this is a base, so this is a good base, and it's trying to contract here. Supply volume is less. When the contraction happens, I want the volume to be very low, and I see that it is low, and if it breaks out, we can consider this one. Next one is GMD, Gujarat Mineral. So basically it's trying to do a low cheat here. A low cheat can be formed. So this is a base. The contraction can, instead of happening at the top, it can happen at the lower third, and that's what is happening. And I'd like to look further tightening of this, and then maybe I'll consider. Okay, are we on? Yeah, we are on. Okay, so that is on marathon. Okay, next one is Marathon Next Gen. Okay, this is also a very looks to be a good setup. You can see here it moves up on volume. Okay, it consolidates on very less volume. So now if you can see here, this is a base. Okay, this is a base. This may be a I don't know, a VCP. Okay, VCP is in play here. There is no supply here because there is no volume. The price is tight. Basically says that there is no supply. If it breaks above this, I'm going to consider this one. Okay, looks good. Next one is Monte Carlo Fashion. Okay, yeah, this is good. This is very small, pretty looking base. Okay, or a cup. Now it can develop a handle here, and then we can if it, so it has not yet developed a handle. Okay, or a contraction, but the volume at this point is low, saying that there is not much supply here. Okay, the people who have entered here have actually gotten out somewhere. So yeah, this looks good. And volume, look at the volume, look at volumes on the up days. Okay, look at volumes above average. It's mostly green volumes, you know. It moves up on volume, it moves always, it moves up on volume. Okay, look at this volume. Okay, so volume signature is good, so this is good. Now this is Jagsonpal Pharma something. Okay, this is really good, guys. This is pretty looking base. Okay, so this is the first contraction, second contraction, third contraction. Okay, and I don't see any large volume, so volumes is very low, so no supply here. So yeah, when it breaks out we'll try to enter. That's good. Next one is Artemis Medicare. So I have just kept it because it can develop some contraction further, and then we'll see. But right now there is nothing here. And this is E mudra, guys. So we have missed the E mudra over here when it broke out this contraction. Okay, and it just went up like anything, but okay. And still there is no pattern as such, but I have kept it. So what I'm looking for is basically if it does something like this, okay, and it tightens, it goes at this point and it tightens at this zone with very low volumes, and then if it breaks out, that is what I'll be looking at. But I don't think that this will happen in this week. So but anyway, I have kept it in watch list. So this is another IPO, okay, another IPO base. Yeah, so here notice that it is very similar, okay, this is very similar to the one that I've taken entry on Alpha Vision. Okay, so this is the one that I'm already in the trade. Okay, notice, just you have to notice the patterns always repeat. Okay, the same pattern will repeat, the same thing will happen each and every time. Okay, so notice that it falls and then it moves up, it forms a very tight base and then a very tight contraction, low volume, and then it breaks out, it goes up. Okay, same thing, very similar thing, if you see here, is happening over here. It falls down, okay, it goes up, it's a very tight base, it does some tightening. Okay, volumes are now very low. Okay, maybe 1 or 2 more days, okay, maybe 1 or 2 more days of low volume, and then it is perfect for a breakout. It will be good for right now. I don't think it's a good for breakout. If this kind of action continues for 2 or 3 days, then definitely this we can draw this line and it will be ready for a breakout, and we can trade it like the way that I just showed on Alpha Vision. Okay, this is good. Let's go to Kama Holdings. Okay, don't go by the name can be distracting. I don't like this. You know what, I'm going to delete because this is in stage 1. Look at the moving average, it's flat. So basically it will just move around like this. It'll move around like this. Again it can break out, again it can come down. Okay, why? Because the moving average is flat. I don't want this. What I want is, I want the moving average to be like this, sloping. I want it to be sloping. Okay, sloping up. So this is not a good setup because it's flat, it's in stage 1. So I'm going to remove it. Okay, now we have two or three more stocks, guys. That's it. I know it's a long video. It has been a long video. How much it has been? Okay, it has been 37 minutes. Okay, so let's see here. Chola Mandalum Finance. So again, it's a moving average is still sloping up. Okay, it is slanting up. It's not flat, I would say, because it is flat, slanting upwards. And here, if you see here, it's trying to form a very tight zone. Once this zone is broken, it's good to enter. Next one is Eureka Forbes. Again, this is a similar IPO based play. You know, we are playing the IPO here. Same kind of thing happens, forms a base contraction. People who are taken here are trying to get out. Now there is not much supply. You can see at the bottom it's tightening, it goes up, then we'll be looking to enter. So I enter when the line is broken. Now again, see this, I showed you with the Alpha Vision, I showed it with Venus Pipe. Okay, Alpha Vision, I've shown you that it is running and it is performing well. Okay, Venus Pipe, it is showing some similar kind of pattern, and Knowledge Marine is also showing very similar. See, same patterns will perform, guys. Every time the patterns will repeat itself. So if you see here, falls down, makes a tight base with no volume, saying that there is no supply. If it breaks up, you know what will happen? Let me show what will happen. Well, most likely, okay, not 100%, because it's a stock market. See, it's the same thing. If it breaks out, we can expect good move upwards. Okay, same volume characteristics is seen here in KMEW as well. See, same volume characteristics, no supply, low volume, okay, at the tight zone. So these are my stocks to watch out for, and I'll be looking to enter if I get any breakout, if I get good opportunity. So yeah, so this is my orange list, this is my green list. Okay, so okay guys, so we have discussed enough, I think, and I think we are good to close the show. Okay, okay guys, see you, and let me know down in the comment box if you have any suggestion, if you want me to cover any stocks or any topic or anything that you didn't understand, then I'd be happy to cover that. Okay, see you, happy Sunday, have a great day ahead.